Hey folks, Dan Frio here with your closing bell for June 12th, 2025. So inflation numbers continue to come in and they continue to surprise us on the downside. So today we got producer prices that came in and they were actually below expectations. So that's also creating more and more friction between the president and the Federal Reserve Chairman Powell. He's saying, Trump says he won't fire Powell. He's going to do something about these rates. So I wasn't kind of in that bandwagon lately, but now I'm going to start saying, okay, maybe we should be cutting rates, because as you're looking at the financial data that the Federal Reserve monitors, everything's looking pretty darn good. So you're wondering why I think rates are going to go down even from here? Well, let's get over and figure that out. So my name is Dan Frio. I actually do this report 2 times a day, and the reason being is I'm trying to explain these things to you and why they're moving or why they're not moving as much as you would expect. So in today's video, we're going to discuss is the economic news that we got this week in regards to inflation, and now why I might be poised to say, Federal Chairman Powell, cut rates, please. So here's what we've seen so far this week. So the major news that we have, and I filtered this down to just the top priorities that we got this week. You're going to see on Friday, there's nothing. So the major news is out so far this week. The news we got was the CPI, consumer inflation. We got producer inflation with the PPI, and we also got to read into the employment numbers a little bit with the initial jobless claims. So let's recap, and you tell me what you think of these numbers. So on the CPI, what the Federal Reserve truly monitors, or they put the most weight in, is what's called the core CPI. Well, that number actually just went down. The last reading month over month was 0.2. They expected that to jump up to 0.3. It actually went down. So this was a kind of a head scratcher. And then we got today, we had initial jobless claims, and they came in right at point, right where we were, and this number was revised. So the numbers basically didn't move, but we had the PPI, producer inflation shock as well. The last reading was negative 0.2. It was supposed to go up to a positive 0.2. It only went up to a positive 0.1. So inflation now is doing pretty darn good on the producer side. On the consumer side, it's pretty good as well. And the jobs market is just completely flat. So if you focus in on over here, this is what the Federal Reserve monitors. You got inflation. Well, they watch the PCE. That keeps coming down. We got that 2 weeks ago, and it went down once again. If you look at the numbers through here, look at it so far this year. In February, we were at 2.6. Where are we at now? 2.1. They want this to be at 2. So we're this far away. Okay, the employment numbers are staying sticky right through here, and the jobs reports don't look all that bad. So if you look at this, and maybe the Federal Reserve should cut. Okay, so here's why rates will never get to 5% anytime soon. We want to go over to look at the bond rates. Okay, so here's bond rates that we're seeing right through here. You can look through here. The U.S. Treasury, and why this is important, you can buy a U.S. Treasury bond. You go down through here. You could buy a 3-month bond and get a yield at 4.3. Heck, you could buy a 2-month bond and get a yield at 4.4. So just every 2 months, keep buying this thing. Okay, because if you go down here, look at the 30-year yield on the U.S. bond. It's 4.8. So here's what this means. You can buy a 30-year government bond with 0% risk and get a 4.8 yield. Okay, so almost, let's say, 5%. Why in the world would you buy any other kind of bond, especially a mortgage bond, that has risk of mortgage defaults, mortgage payoffs, and everything else? It's, anywhere in the range of a 5% rate. You wouldn't. So what that's called is the risk premium. Usually the risk premium in this is about 1.75. So we would take the 10-year Treasury, add 1.75 to that, and we would be at 6.1. Well, where rates today? 6.8. So there's about a 75 basis point spread in here that should come out of the system once everything kind of falls into place. Historically, that's where we should be. Why aren't we there? Well, the Federal Reserve has rates higher than expected, and there's for a good reason. They were trying to bring down inflation over the last 2 or 3 years, and they've done so. Now it's basically what the tariffs are going to do, and also what the big, beautiful tax bill is going to do for all this. But you can't keep kicking the can and wait for the economy to crack before you cut rates. So I'm hoping the Federal Reserve to come to their senses here soon and start actually cutting rates. They don't have to do substantially. Even a 0.25% cut would give the markets direction to say, Federal Reserve, we know, as the Federal Reserve, they're saying, okay, we know things are starting to get weak, so we're going to cut into this just one time and see how the tariffs go, and it might be a one and done, or as the tariff news and everything else comes back in, we might be on a continuation path of cutting. Or If inflation kicks up once again, they have a path. They can go back and increase rates once again as well. So why not at least try to start cutting rates? Because one of the benefits to that is, too, you got to realize these government bonds, when they have a yield at this, who's paying that? These interest rates are actually being accumulated, and they're being accumulated by us, the taxpayer. So we're having to pay a lot of this interest on these government bonds, and so that's really hurting our national economy as well. So these are just pieces of the puzzle you need to understand when you're focusing on mortgage rates and actually how bonds work. So that's basically what we're looking at. So right now, the Federal Reserve's meeting in 5 days. There's still likelihood of basically 100% chance they're not going to cut rates. But the beneficial piece of this is this was about 86% over here, right above my head or right behind my head. What this is telling us at the July meeting, now there's only a 75% chance that the Federal Reserve will not cut rates or do anything. They'll stay right at the 4.25 to 4.5 yields on the federal funds rate. But this was 86% just recently. So as the news trickles in, I don't think we're going to see anything next week from the Fed. But in the July meeting, could they be cutting then? They might be. So pay attention daily and watch my shows daily so you can monitor this and how these are affecting these. So hopefully you'll understand a little bit more about these and how they work. Guys, I monitor this every day. So not only can I help you out with getting approved with a mortgage, I can also track these rates for you on a daily basis. So if you're looking to buy, I'd love to be able to help you. And if you're already a homeowner, I'd love to track those rates for you for a position where you can jump in and refinance. So visit us at therateupdate.com. Here's my website. You can find out more about me and my team right through here. Give us a call if you're interested in reaching out to us, but let's talk about who I am and what I do. So I'm a federally licensed mortgage loan officer. Yeah, I work at a federal bank. That makes me licensed throughout the entire country as well as Puerto Rico. But the unique thing about our bank is we're also a large mortgage brokerage. So I don't know of any other, there's about 3 or 4 other banks in the country that do what we do, but not as good as we do. So if you want to reach out to us to get quotes with up to 30 different lenders, this is where you go. Go to therateupdate.com. You can put in your application right through here if you're looking to refinance or buy. You can give us a call right here. We also have a tab up here. If you want to ask me a question, just plug it in, ask any questions you have. But if you would, put in your name and phone number. I'd love to reach out to you and talk to you directly if you want, or text you and just answer those questions directly. If you want to request an appointment, you can do that here or schedule a consultation here. And don't forget, we have over 3,000 videos on our YouTube channel, and here's just some that we handpicked just to help you guys out. So thanks for watching, folks. God bless. Have a fantastic evening, and I'll be back here tomorrow to see how all this mess starts yet another day. Thanks for watching, folks. Have a great night. See you tomorrow. Bye-bye.